What is adjusting entry? So this is a very common topic in your accounting and finance. So I will explain the definition with the help of an example. Then I will explain the purpose of adjusting entities and key takeaways. That's what you can conclude from this topic. So I made this topic very crisp and summarized for you so that it will be easy for you to understand. So first of all, kindly subscribe to my channel. So now, what is an adjusting journal entry? So by definition, it is an entry in a company's journal ledger that occurs at the end of an accounting period to record any unrecognized income or taxes for the period. When a transaction is started in one accounting period and ended in a later period, an adjusting journal entry is required to properly account for the transaction. Adjusting journal entities can also be referred to the financial reporting that corrects a mistake made previously in the accounting period. So example. So now assume a construction company begins construction in one period but does not invoice the customer until the work is complete in next month, 6 months. So the construction company will need to do an adjusting journal entry at the end of each of the months to recognize revenue for 1/6 of the amount that will be invoiced at the 6-month point. So I hope this example helps you to understand the journal entity. Otherwise, I have another example for you people. So suppose a company has a fiscal year ending December 31, takes out a loan from the bank on December 1st. The terms of the loan indicates that interest payments are to be made every 3 months. In this case, the company's first interest payment is to be made in March 1 because in terms they have to pay loan after 3 months. So from December to March, obviously they have 3 months. Okay. Then, however, the company still needs to accrue interest expenses for the months of December, January, and February. Since the firm is set to release its year-end financial statement in January, an adjusting entry is needed to reflect the accrued interest expense for December. To accurately report the company's operations and profitability, the accrued interest expense must be recorded on the December income statement, and the liability for the interest payable must be reported on the December balance sheet. So the adjusting entry will depict interest expense and credit interest payable for the amount of interest from December 1 to December 31st. So I hope this example helps you to understand better. Otherwise, if still you have any query, then you can comment me and I will make a video or I will reply you. So at the end of the period, we need to make adjusting entries to get the accounts up to date for the financial statements. So now, what is the purpose of adjusting journal entity? So the purpose of making them is to make sure the journal ledger account balances are current before preparing the financial statements. They are used to reconcile transactions that have not yet closed but which straddle accounting periods. These can be either payments or expenses whereby the payment does not occur at the same time or as delivery. So this is the basic purpose of adjusting journal entities. So, adjusting entities are needed whenever revenue or expense affect more than one accounting period. And every adjusting entry involves a change in either a revenue or expense and an asset or liability. So, key takeaways from this topic. This is the very crisp points, and I summarize it for you guys to understand it more deeply. So adjusting journal entities are used to record transactions that have occurred but have not yet been appropriately recorded in accordance with the accrual method of accounting. Adjusting journal entities are recorded in a company's journal ledger at the end of an accounting period to abide by the matching and revenue recognition principles. The most common types of adjusting journal entities are accrual, deferral, and estimates. So in my next video, I will make a separate video on the types of adjusting journal entities, and I will give you in more detail about their types. So it is used for accrual accounting purpose when one accounting period transitions to the next. So companies that use cash accounting do not need to make adjusting journal entities. Not all journal entries recorded at the end of an accounting period are adjusting entries. So this is very important point, and you have to remember that not all journal entities recording at the end of the accounting period are adjusting entities. For example, an entry to record a purchase of equipment on the last day of an accounting period is not an adjusting entry. Okay. So thank you. That's all from my side. Kindly subscribe to my channel and like and share my video. Thank you.